When manufacturers think about purchasing insurance, they're usually thinking about their product liability or product recall, their workers' comp because they have several employees, or maybe even their inventory. But what about errors and omission for manufacturers? Why do manufacturers need it? Let's break it down in this video. Errors and omission insurance covers manufacturers when a customer alleges that a product you made caused them financial loss, even if there's no bodily injury or physical damage involved. This is different from a product liability claim, which covers bodily injury and property damage from a defective product. Errors and omission, or E&O, responds when the claim is due to financial harm caused by mistakes, faulty designs, or failure to meet performance standards. In today's manufacturing landscape, your buyers most likely have strict guidelines and expectations about the quality of your product. If your product doesn't meet these standards and it costs them money, they may sue you for those financial damages. And here's where the errors and omission steps in. So here's a real-world example of where errors and omission, or E&O, can trigger. Imagine you manufacture a component of a product that gets integrated into another product. Later, they discover that your product failed to meet their specifications, forcing them to issue a product recall. And not just issue a product recall, but also they have to halt the production of future products. In this scenario, nobody's injured, nobody's property is damaged, but they still have a financial loss. And this is the claim that your general liability or your product liability typically excludes. Without E&O coverage, your business would be required to cover any legal fees and any settlements out of pocket. Here are some common scenarios where manufacturers can face E&O claims. Number one, the one we just discussed, right? Your defective product halts or delays production for your client. Number two is failure to meet performance guarantees that are contractually obligated. Number three is design errors that cause your clients financial harm. And number four is incorrect assembly or testing that leads to delays or losses for your client. Remember that product liability protects your business when there's physical damage or bodily injury to the consumer, but financial loss with no physical damage or physical harm is often excluded. So this means that even though you feel like you're fully protected, in reality, without errors and omission coverage, you may be exposed. As you know, manufacturers operate in a complex world full of contractual obligations, strict supply chain demands, and increasing customer expectations. An overlooked detail, a design error, or miscommunication can quickly become an expensive problem even if you did everything with good faith. E&O coverage gives manufacturers a critical layer of protection. Legal defense costs, coverage for settlements and judgments, claims of financial loss tied to your product. At The Bunker, we love to help manufacturers understand where their risks lie and help move them from danger to a safe place. If you manufacture parts, products, or components, it's time for you to review your current coverage, and we're happy to walk you through what it would look like if your manufacturing company had some errors and omission coverage. Click the link below and schedule some time to chat.